Okay, so thanks for tuning in to DebtBytes, our YouTube channel, and back with me today. We've had on past shows, or one show, for student loan help, and specifically private student loans, is Andrew Weber. Andrew, thanks for joining me again.
Michael, thanks for having me on. It's good to be back on DebtBytes.
You bet, you bet. So last time we talked, we covered a whole bunch, right? We did a lot of heavy lifting about federal student loans, about private student loans, options available to each. Now we're going to focus and spend some more time on private student loans and particular servicers even, and or bad practices, good practices, what you're seeing, trends you're seeing. So let's get started. One of the obvious things to talk about is that politically those winds have changed and we have a new administration, and there's some tea leaves that we can read a little bit and how that might impact all of us going forward in the student loan space. What can you tell me? What do you think is what's happening? What kind of commentary can you share with me there?
Well, I think you really put it well as far as tea leaves. There's no direct knowledge that we have or direct game plans that we've seen yet from the new administration. But we can kind of look at some different signs, things that were said during the campaign. So it is a very interesting time, and it'll be interesting to see what happens going forward. But one thing that I remember from the campaign is that President Trump mentioned a 12.5% income payment plan. And I read the fine print on that in an article, and it mentioned it was going to be for private student loans as well. Now, I think that would really be something because the most recent statistics I've read about private student loans in the Wall Street Journal was that only 7.5% of student loans are private. Of those 7.5% of private student loans, of that amount, I think it was like 2% or less are in default. So I think we could see some real pushback from the private student loan industry, even though people are struggling. I hear every day that I've been paying for years, my loan's not going down. The actual default rate is pretty low. It's 2%. So that's one thing. And then on the other hand, once President Trump was elected, between his election and the end of the year, end of 2016, Navient stock shares rose by over 50%. So Navient, being the largest private student loan originator in the country, as well as a big federal loan servicer, they think they're going to be doing better in some way with private student loans, and that's pretty indicative from their rise in the stock market. And then there's also the general talk of switching more of the federal loans to private banks, whether that's private loan origination taking over more of that market, or if it's a return to the pre-2009 FFEL model where banks were issuing student loans, but they were still guaranteed by the government. So some interesting things there. Like you said, it's really just kind of reading the tea leaves at this point. A lot of people have been asking me, what's going to happen. I don't know. The Department of Education doesn't know. I've asked them. So we're all kind of staying tuned to see what concrete changes are going to be put in place.
Okay. Well, and I hope they're thinking about family formation, because student loans have been attributed to one of the bigger reasons why we have less family formation at the 20-something age group. And if you're taking 12% of somebody's income to repay their student loans, that's definitely going to impact that. One of the other things that you and I talk about, because we get together once in a while and talk about issues, and people are getting these Navient letters. And I know you have some examples that you've gone through with clients. Tell me a little bit about what you're helping people, how you're helping people understand and interpret and react to those legal threat letters from Navient.
Right. So this is one of the most aggressive collection threats that I've personally seen in a long time. I've even written in my blog about this, sorting fact from fiction when settling Navient private student loans, that if a third-party debt collector was doing some of these tactics, they could possibly be in violation of the FDCPA. It seems that Navient is, taking a little more leeway with that. So what we're really seeing, and this started happening, at least I started noticing it, about early spring of 2016. So right about the 4th, 5th, or 6th month that an account is past due, a Navient private student loan is past due, there's a letter sent out by UPS mail. And it says at the top, I actually have a copy right here, it says litigation review. We are preparing to refer your account to our legal network partner to be reviewed for litigation. It goes on to say we may be successful in gaining a judgment, executing against your assets or income. Doesn't say that you can actually hire an attorney to defend all that. They kind of left out that important little detail. But this is an edited, redacted version of that letter. So a lot of borrowers watching this program are probably going to recognize this letter. And what we've seen is that, it's not that it's a completely empty threat, because Navient is a pretty aggressive private student loan lender, especially on larger balances, accounts over 100,000. When those default, they are going to go to a collection attorney. But we are still seeing settlements in the low 40% to 50% range with skillful negotiations when it goes to those types of agencies. But we're also seeing other types of letters that are kind of a play off of this, and one that's even more aggressive that I have here as well. And this was for one of my clients located out west, kind of near where you're at. And they received a letter that said, we intend to file a lawsuit with the firm of, and they named the actual collection firm. I looked them up. It was a collection firm in that person's state. So I said, well, get ready for a collection attorney to be involved. I'll start negotiating with them. And the outcome that I get with the collection attorney firms is the same. The tactics that I use are different than if it goes to just some regular old collection agency or internal recovery. The interesting thing about this one is that it never went to that collection firm. It just went to Navient Internal Recovery. And it was one of the best settlements I had last year. And we negotiated directly with the manager at Internal Recovery. So when you make a serious threat like that and you don't follow through, I think it kind of questions or undermines the credibility of those letters. So my main takeaway with this letter is that it is time to do something, to make a plan, whether it's to do the Navient low interest rate reduction program, which I consider to be a short-term solution, which brings the account current if it's done before default, or to prepare for settlement. And if you're going to prepare for settlement, the best settlements do happen after default. So when someone receives this letter, it doesn't mean default is imminent. It usually means it's 2 or 3 months away. And as we've talked about before, Navient is taking quite a while to charge off or default their accounts, anywhere from 210 to 235 days past due, whereas a lot of lenders are going to do it right at that 180-day mark. So we're seeing this letter come out to everyone, whether they have a $5,000 account or a $150,000 account. They're getting this letter, and it's around the 4th, 5th, or 6th month the 4th, 5th, or 6th month past due. So it's something to keep an eye on. I really consider it pretty much meaningless, except for the fact that it lets you know where the account is in the collection cycle. So if you get a letter like that, don't be scared. Don't take it at face value. I would even say that. But it is time to put together a game plan, because that does mean default is coming up, and it could be assigned to a collection attorney. However, they're not going to sue you right away.
Well,
even if it goes to a collection attorney, you've got some time to work out a settlement or a payment plan, and it's not easy to negotiate with those folks. But there is, some options once you receive this letter. So you're not going to get a lawsuit in the mail the next month when you get a letter like that.
As with all things, it's basically be proactive. Come up with a plan. Andrew, you're available. I should point this out. The number on the screen, you're option 4. You're part of our network. People can call you and talk to you about their private student loan issues. They get a letter like this. Go over. You'll comb their situation and say, okay, look, here's what a map from here to where you want to be, which is out of student loan debt. Here's what that map's going to look like, and you do that.
Absolutely.
Let's move on to another student loan debt collector, probably my favorite because of how aggressive they are, and I'm being completely sarcastic, and that would be NCT. We covered them in our last video. So what's happening different or new, if anything at all, with National Collegiate Trust?
Well, I would say for the most part, we've settled a lot of National Collegiate Trust accounts this year, and for the most part, it's business as usual. They take a longer time to settle at a good percentage, and some of the settlements are higher than what we'd see with Navient, for instance. So with Navient, we can sometimes negotiate a settlement down to 40%, 42% within a few months after the default, once it goes to collections. With the National Collegiate Trust, I actually spoke to a collection manager at a well-known collection agency that handles a lot of their accounts, and they told me that the type of settlements that I usually get are not possible during the primary allocation of the debt. So for the very first debt collector it goes to, no matter what, you're probably not going to get them down to 50%. It's going to take a couple more placements, and there's kind of a sweet spot in there, right? You don't want it to go to a collection attorney because with the National Collegiate Trust, at that point, they're going to start using more leverage. I've seen instances where if someone couldn't do a 50% settlement with a non-attorney debt collector, they will send it to a collection attorney, and they'll basically say, you can take 65% or we're going to take you to court. But as some borrowers have found out, if they take you to court, they don't always have all the documentation to prove that they own the debt. The National Collegiate Trust and Turnstile Capital Management, owned by Goal Structured Solutions, as we mentioned before, they're kind of taking a backstage approach to this, but they're the ones that own the National Collegiate Trust, which is an actual trust fund. So they're really taking a more aggressive approach when it goes to a collection attorney. But I've heard from several attorneys, and there's even some articles out there about this, that they're getting beat in court. And it's not because they can't validate the debt under the FDCPA, where it's, as you mentioned before, a very low baseline as far as what the lender has to come up with to prove or to do the actual validation. But what I've read in an article by attorney Richard Gaudreau, I believe he's out of the Northeast, was that when the National Collegiate Trust purchased these accounts from whatever other private lender that had them, they don't always file the proper SEC documentation, and that's where they nail them. And they're getting some of these accounts dismissed, and they're getting good settlements in court, sometimes with better percentages and a better structure, a longer structure on a settlement than what we would see outside of court. So obviously, I'm not an attorney. I don't get involved with the legal process, and whether someone wants to settle it before it goes to court or wait until they get sued and take their chances with an experienced student loan attorney, that's really up to their own risk tolerance and what their goals are with the loans.
Well, there's an important point to make there, because it's not just for student loans, it's for any kind of debt collection, credit cards, any kind of unpaid bill like that, is that just because you're sued doesn't mean you raise the white flag, give up, put your head in the sand, ignore it, because what can I do? I don't have any resources. Fact of the matter is, when you get informed and you hook up with the right resources in your state, like an experienced debt collection defense attorney, and you're mentioning one that's good at student loans and NCT, but there's ones that are good at credit cards and stuff too, is tap into those resources, right? So if you have an active lawsuit, you're being sued by NCT, tell me a little bit more about your situation in the comments below, and I can respond to you and hook you up with some good resources in your state to help defend that if it's timely. Anything else about NCT before we move on?
Just that I think there's a great trend we're seeing lately with more and more attorneys becoming knowledgeable about NCT in particular and defending their lawsuits, because they are, I would say, the most litigious private student loan lender. So Emily Smith out of Columbus, Ohio, is someone I talked to recently, and her firm does quite a bit of NCT defense. And there's starting to be more and more attorneys in different states. There's several in California. Of course, there's Joshua Cohen, who kind of led the charge with this several years ago and did the student loan attorney workshop to teach other attorneys about how to defend these cases. And it seems to be a growing movement with bankruptcy attorneys and consumer defense attorneys. And I think it's very encouraging.
Awesome.
So it's good to see.
Yeah, I just covered a situation with a gal who's a single mom of 3, sociology degree, and she's never going to be able to earn her way through repayment of her loans, and she's filing bankruptcy over some other issues, and trying to hook her up with California resources that know how to do adversarial proceedings in a bankruptcy court to get student loans discharged. It's not impossible, folks. It's not commonplace yet. I hope it becomes a little bit more so, but there's options even in bankruptcy. So
you brought up a good point there, Michael, if I can just jump in real quick. When people file bankruptcy, sometimes I've heard of bankruptcy lawyers who are not so knowledgeable, they include the private loan and it auto defaults. Like I had a recent client where his co-signers did a bankruptcy and his loans went into default because they were included in the bankruptcy and he didn't realize that. And unless the attorney goes for the adversary proceeding, or the AP as they call it, the loans are not going to get discharged. And there's no guarantee they're going to get discharged if they do an adversary proceeding, but that's the only way to attempt it. The attorney has to do that.
Yeah.
But again, we're seeing more and more attorneys that are doing that and are having success with that, which is great.
Yeah, so key here, if you're watching this video and you're thinking, hey, I want to talk to an attorney about bankrupting my student loans, find one, call around, and find one that has, and ask them point blank, do you have adversarial proceeding experience for student loans? And if they do, ask them what their success rate is, and act accordingly. Okay.
Yep, I think that's great advice because a lot of them are going to charge a decent amount just to attempt the AP.
Yeah,
so you want to find someone that's been able to do it before.
Absolutely. Let's talk about a couple of other private student loan lenders like Discover, KeyBank, Wells Fargo. What can you tell me? What's new? Any updates about them?
Well, the unique thing about those guys, obviously, is that they are the banks that are also doing private student loan lending, as opposed to like Navient or the National Collegiate Trust. So there are some other issues, and as always, each lender has their own guidelines and their own really behavior that we can kind of track by looking through all of our old settlements and our experiences with them. So Discover, they're tough to deal with. They're very tough to negotiate with. It's very difficult to get them down to a good settlement. In my experience, it's taken months and months of negotiations. However, they don't seem to be that aggressive with litigation from what I've seen. That seems to run parallel to their operations with credit card debt.
Yeah, big difference.
From what I've heard from other credit card negotiators.
Yep.
But we've not seen a lot of really aggressive litigious behavior from Discover. As far as Wells Fargo, kind of the same thing. I've yet to see a Wells Fargo private student loan lawsuit. I'm sure it's happened before. I've just not ever seen or heard of one. Some of the redacted settlements I have posted here behind me are of Wells Fargo settlements.
Nice.
One of my lowest ones was in the low 30% range, and it was with a non-attorney collection agency. The troublesome thing that we've seen in the last year with Wells Fargo and with KeyBank is that if someone has a Wells Fargo checking account or a savings account, or if they have a KeyBank checking account or savings account, and they have delinquent private student loans with those lenders, they are reaching into those accounts and they're pulling money out. And when the borrower files a CFPB complaint, then they respond by saying, well, this was allowed in our fine print. So this is the cross-collateralization that we used to see a lot of with credit card debt. And now we're seeing this troubling tactic being used by some of the bank-backed private student loan lenders. So the amounts I've heard that have been taken out range from $700 to $15,000. Now, if you get $15,000 taken out of your checking account without any notice of that, that could put some people on the street. That could prevent you from buying food for your family. And Wells Fargo and KeyBank, if you're listening, stop doing that. That's really bad. We don't want you to do that. There's other ways to work these things out.
So a couple things on that, just for viewers, is that you have state laws that protect you from certain, you have certain exemptions. If you meet them, you can contest a bank levy, wage garnishments, things like that. It's a formal process. You have to do it through the court. Talk to the court clerk about protesting, some kind of bank levy. And if you meet certain exemptions, your profile is that which, hey, I'm not going to be able to buy food for my children or diapers or whatever. There's a lot of situations where you can get those funds returned back to you, or a portion of those funds returned back to you. So don't give up if that's happened to you.
Right.
It's important for people to know that cross-collateralization happens. What you just talked about, hey, we used to see that with credit unions. Actually, we still see a bunch of it with credit unions on if you've got a car loan and you're not paying your credit card. It's hard to get your title back even after you settle or get your title at all. There's a whole bunch of things to be concerned about. And these cross-collateralization clauses empower these banks to do that. But it's not the end of the story. Again, here, get informed. If you have an issue like that going on, just tell me a little bit about the backstory, who you're dealing with, what happened in the comments below, and I can direct resources or give you some resources to follow through on and see if you can get some things reversed or get the help you need. And of course, Andrew you're available, right? You're on the number that we have on the screen. You're part of the call tree there. You're option 4. And I want people to be able to reach you just like they do on the website. People may not know this. I do a lot of the comment back and forth here on the YouTube channel, but on the consumerrecoverynetwork.com website, we have some very active pages about student loans. And you're constantly, every day, you're on those things, giving people helpful advice, tips, and feedback, when they add their voice to the discussion on those pages. So thank you very much for all that you do for people, because hundreds of people read those pages every day.
Absolutely.
Let's put a bow on this thing. Is there anything else you want to share? Updates in the student loan market and settlement?
I think we really covered a lot of it. The most important thing, I think, is that regardless of who the lender is, if you're behind but not yet in default, you're going to experience some significant collection pressure. They may try to call friends and family members. They're not supposed to disclose anything about your debt when they do that, but they're putting on the most pressure right before the default, because the last thing they want is for that debt to become a non-performing asset for them. But for settlement, that's exactly what needs to happen. So my take on a strategic default has always been it has to be the borrower's choice. I present both sides of it. There's pros and cons to doing it. It's not an easy process. And for some people, getting through the collection calls and ignoring them while monitoring their letters and everything until the default, it's very difficult and it's very stressful. But the most collection pressure you're going to see prior to any type of legal action or a collection attorney is likely to be right before the account's default, especially with Navient. They're going to be calling a lot. They're going to be sending you these letters. So I think the most important thing is, like you said, you don't want to stick your head in the sand. You don't want to throw your mail in the trash. You want to stay on top of things and have a game plan. And for a lot of people, that means hiring a professional to help them through the process. There's not a lot about Navient's collection cycle that I don't know about. And if there are issues post-settlement, which are rare, although I did have one yesterday that I had to resolve, I do get involved to fix those once the settlement's finished. So just to kind of end, I guess, with a story about a client of mine, we settled her Navient account in August. Everything was going fine. And this month, I start getting calls from one of the collectors that was assigned to her account saying, hey, we need you to call in. We need you to do something about this account. So I called the guy. He was in the Navient Internal Recovery Department. I'd worked with him before. And he says, oh, no, that settlement was just for one of the 3 accounts. I've got the settlement letter in front of me, and it has all 3 account numbers on it. So what should have been an easy fix was 2.5 hours on the phone, talking to managers, and finally got confirmation that, oh, sorry, that collector didn't know that this was for the 3 accounts, and we can clearly see that on the letter. Everything's good as long as they continue making their payments. So those issues are rare, but they are very problematic when they pop up. And for someone dealing with that on their own for the first time, it can be pretty intimidating. With that said, most settlements go pretty smoothly if they're executed properly.
Well, thanks. Thanks for the story and the warning. Just what you said is be proactive. And so fortune favors the prepared. Don't let your student loans run your life. You've got options, you've got decisions. Some of them are hard decisions. They're not easy to make, but at least you can make them from an informed position. And you provide that. So thanks again. And thanks for coming back on DebtBytes.
Absolutely, Michael. Thanks for having me.
All right, man. See you next time.
All right. Sounds good.